Thank you very much to you. I suggest if you can stop sharing your screen for the Q&A, people can see your face. Right
Yes,
now,
of course.
you are not visible. Fantastic, thank you. Is there any question? No one? All right, in that case, I'd like to thank you very much.
Thank you very much.
You join me in a round of applause. Thank you.
Thank you. Thank you.
So for our next talk, we have our panel on decentralized finance, which is going to take a minute or two to set up the setup, the tables, the chairs. Well, I'll introduce the panel first, and then we'll take a moment to do this. So this panel will be moderated by Cristina Lucrecia Corner, maybe mispronouncing, sorry, editor-in-chief at Cointelegraph. We also have four panelists: Neil Raj, senior teaching fellow and researcher at UCL; Hugo Filion, co-founder and CEO at the Flair Network; Daniel Perez, co-founder at Miro and Gyroscope; and Gaspar Pedruzzi, co-founder at AB Wine. A lot of co-founders. This is we're going to have, just like with the other panel, an entire hour. I'll be helping by marking the time, although we have our own moderator. I'm sure we are going to be flexible. So you're more than welcome to come to the stage.
Thank you, Joan. Thank you so much. Thank you, UCL and Paolo, for inviting all of us today here. It's an honor for me. So I'm Cristina Lucrezia Corner, editor-in-chief at one of the largest and oldest publications dedicated to blockchain and decentralized ecosystem. And we are decentralized as a publication as well. And the panel today is called Decentralized Finance. I especially appreciate that it's written in the British manner with S, because we are using American standards at Cointelegraph. My very first question, in order for all of you to introduce yourselves properly, but not in this pitchy manner that usually all the panels have tendency to do. Can you tell us a little bit about how the recent, let's say, 12 months have impacted your lives? What dynamics have you seen within your projects, within your professional life? Obviously, we've seen more or less of everything within the last 12 months. DeFi at almost 200 billion in the end of last year. Now we are 42, I guess. Recently we've experienced something like this amazing sunset, dramatic, haptic, saga, dramas everywhere. But tomorrow will be a sunrise. So we are here in Dynamics. Please tell us a little bit about your year. Let's start with the left side. Thank you.
Hey. Thanks a lot for hosting. And I'm Daniel. So yeah, I have a few roles. I'm finishing a PhD at College London on blockchain, and also I'm founder of two DeFi protocols. So yeah, this year, I mean, was a bit of a mess overall. So thank God we closed the rounds for both startups before this whole mess started, because it would have been much harder after this. But other than this, no, I mean, like, it's the general, let's say, environment is vastly worse than it was a year ago, obviously. Much harder, like, to attract liquidity, to get people on board and all this. But I mean, it's cyclic. It feels like right now, hopefully we cannot go much worse than this at this point, but we'll see. Yeah, I suppose.
Thank you so much. I wanted this. This is the end of the day. Thank you so much. Gaspar, what about yourself?
Hi everyone. Yeah, I'm Gaspar Pedruzzi. Speaking about spelling, I've seen the three different spelling names today. Yeah, so I'm one of the founders of AP1 protocol. That is the protocol doing derivatives on interest rate. Last 12 months of my life have been very intense. Very intense because of the market, very intense because we went to mainnet almost a year ago. So it was extremely interesting to see and not only the product evolving, but the user, the awareness, the type of profile that we see as a liquidity provider and user in DeFi, and also that evolving through marketplaces. So related to the confidence of investors, of users, their behavior and interaction when they are looking for a product, how they evaluate security. That kind of thing is very evolving currently. And yeah, I mean, things are going great. We did raise money too before and after from the cycle. So we're comfortable, but yeah, for sure things are changing, but in a good way as well, because there's constraints and helps you being more organic and sustainable as well as a company business model.
Thank you so much. Let's move forward. Yeah.
Hi, everybody. I'm Niall Roach. I'm a lecturer here at the School of Management. Well, we're very used to this room. Also in computer science as well, and the fintech module there, and member of Center for Blockchain Technologies.
Also CTO in residence.
CTO in residence,
I
yeah,
like
of
it.
this. So kind of anything tech related. This is School of Management, so they need something technical. In theory, come to me. So I teach modules around data engineering, machine learning, and blockchain as well. But that's just one of my hats. The other hat is talking about interesting timing. Myself and some colleagues decided to create a venture builder in the area of Web3, which has led to some interesting comments from some former colleagues who left a kind of corporate world, nice paying jobs in a law firm, and said, do you really want to go and start a Web3 venture builder in this market? The answer is definitely yes. We found it to be overwhelmingly the right time. Now's the time to build any of the events, and there have been many in the last number of weeks between, say, Token 2049, Slush in particular, the Open Protocol event 2 weeks ago. Everybody's still quite bullish, even though you know, in certain areas it's definitely an interesting time. It's necessary, and we feel that now is the time to clear out a lot of the bad things that give everybody else a bad name, to leave room for whatever arrives from this, and hopefully we'll come out stronger. And the fundamentals are there. There's very good reasons for doing tokenization. The fundamentals of DeFi are good. As we've seen this morning, a large set of the problems are related to more centralized institutions. We saw this very good slide earlier with the proportion of total assets that are actually DeFi versus what people think are DeFi, and just confused with centralized crypto that's badly managed. So looking forward to that finally getting cleaned up and allowed to move on and create something nice and innovative.
Thank you, Niall. Hugo.
Yeah, so the last 12 months have really, I guess, for me and for my team, has essentially reconfirmed our suspicion that basically what everyone saw as this massive rush of money into DeFi was largely mediated through CeFi. People like, you know, Celsius, Multiply, and the rest. We're trying to build essentially more DeFi stuff with more tokens, essentially trying to broaden the ability to use DeFi. A lot of people have put money in things like Celsius so that they can essentially get some form of yield on Bitcoin or things like XRP or even Doge. A lot of which, you know, today isn't broadly in DeFi with the exception of Bitcoin. Sort of our take has always been, you know, someone has to serve that market in a decentralized way. That's, so for us, it's been essentially proving our thesis.
Thank you very much. You all are incredibly courageous people, but actually just to add to the picture, we doubled our audience since the beginning of the year, and our biggest days in terms of traffic were this last 2 weeks. So it also means that any crisis is an opportunity. So my next question to you is what do we learn from what's going on in the market? Especially the founders, co-founders, you obviously have a very interesting time to create your roadmaps right now. So what do you learn from what's going on, and what do you unlearn from what's going on as well?
Well, there are a lot of interesting things. I mean, for one of the projects I'm working on, we're actually building a stablecoin, so which is quite, let's say, timely for this year. And I mean, many people were like a bit sort of, is it time to build a stablecoin now with like all the Luna drama earlier this year and so on. But I think actually it was a very good, like, I mean, we've been calling out, for example, this Luna thing for a while already, way before it collapsed. I mean, it was clearly not going to work. And that's something that at least like many people didn't really like understand or even look at what's a stable coin, why it works, and this sort of thing. And this sort of like big event, and especially when they're bad, people will like try to see what failed, why it failed. And we could see that like there has been a lot of growing interest about like the dynamics for this particular case, how a stablecoin works and why it works, and really this whole like education part, I feel like became a bit easier because people were like a bit more interested in understanding like what happened and where did the money go and why that didn't work. So I feel like that was quite an interesting point to see that such failure can like create some opportunities to just like build this stronger community and educate the users a bit better on different concepts around DeFi. More of my take for this year at least.
Let me stop a little bit on the stable coins point, because there are rumors that Tether may be next. In case it happens, the listen part, how do you think it will impact the whole discussions around stable coins?
I mean, it's for Tether, it's been like quite a long time already that like it's been very suspicious. Nobody knows if the money is there, it's not there, it's very non-transparent. And I think it's like the typical kind of thing that goes extremely against every single value. It's sort of DeFi and blockchain in general. So it will for sure like be a mess, just like FTX, probably capacity worse. But I also do feel like it's if it does happen, there'll be another crash that's still recoverable simply because like it's really something that everybody has been sort of fighting against that actually kind of sort of goes down. So I think it would be a very short-term like enormous problem, but longer term, I think it probably would like kind of not make such a massive difference.
Well, it's true that about Tether, there has been a story already that hasn't been there yet about FTX. I don't know, like a few months ago, nobody, well, the majority of us didn't suspect. Do you, Niall, have any perspective on Tether and all the stable coins?
So in a previous life, I did work at a law firm where we were, I'm not aware, so no legal advice here, but we did work with a number of different companies who were interested in creating their own stable coins and going down that road. And Tether, with colleague Walter and myself, there had many conversations about Tether in particular. And I think the key thing here is transparency. The whole point of using DeFi and the infrastructure of crypto is about transparency. This proof of reserves, which has been coming up quite a lot for exchanges, is a step forward. Why not have the opaque nature of this stuff? It should be out in the open. It should be very clear. Obviously, there was the SBF came on some conference yesterday, I think, and said either he didn't know what was going on and how much liquidity was there. So at best, naive, at worst, fraudulent, I guess. So even just not knowing how much liquidity you have, or what are the assets that are actually backing the stablecoin, not knowing that internally is a massive issue. So if this is far more transparent and traceable, then it's going to add more confidence to the industry. And again, coins like that, stable coins like that, not that stable, it shouldn't be there. There was an argument against it, algorithmic stable coins as well. So as long as everybody has transparency and it's clear, I think then at least you should know what you're getting into.
Yeah, just wanted to add something. Definitely agree with the transparency issue. But jumping on that as well, for example, the Luna example was not much about transparency. People were actually knowing more or less how it was working, accepting that more or less it was the fact that it was not this time. And I guess like one of the big things for stable coins when we were mentioning Tether and even stable coins where people are not necessarily engaging in criticism related to an impact, not like USDC. When we talk about DeFi, I think having a big system that blows up is important to then realize we're building composable systems, and it's important to realize the vertical nature that we're building as such, and in terms of dependence and resilience of those different systems. What are we relying on? And it can be still organized, not collateralized. It can be a protocol that is completely collateralized, but that can be hacked. It can be centralized actor that is posing asset because they have such rights. I think this kind of thing are actually changing the open permissionless autonomous financial building sources. It's definitely for me a very key point.
Very interesting point. Now, can I get back to what you mentioned, the interview that's on that yesterday to New York Times? This is obviously one of the biggest stories going on in the industry that, without any doubt, will impact how we are moving forward. So I heard different points of view, whether Sam has to talk more and give answers, whether he actually has to be just to shut down and maybe be shut down somewhere. Not for us to decide, but how do you think, what should happen in order to make the best out of this situation and not to create bad precedents for the future, for the sustainability of the whole industry? In the FTX case, do you have anything?
In ethics?
FTX and
Yeah, well, I mean,
Sam's perspective.
I would say first we have to teach everyone to use a wallet. I mean, the fact is people are using FTX and Celsius and all that kind of stuff because our UX sucks, like so bad, and it's a nightmare, and to make 20 transactions to do anything. And we have to figure out how to make that better, because otherwise we're going to have this over and over and over again, or things like FTX should be regulated as banks. If we have to use centralized because we can't solve the UX problem, then exchanges have to be regulated in exactly the same way banks do.
How is it we should do that?
How can we solve the UX? Now that's not my.
No,
that
I
really
mean,
isn't my area.
how do we create this framework in terms of regulations, in terms of like, this is a little bit
Well,
similar in my opinion to the ESG discussion that we had previously. We have to move quickly. We can't just.
Yeah, I mean, exchanges.
You are based in Dubai,
I'm
right?
based
So
in
Dubai is
Dubai.
actually a very interesting example of they create legal framework according to the digital assets department in police. So they work together with the government to create this legal framework to apply to the crimes that they just observed. And this is not the case in so many other jurisdictions.
From my perspective, an exchange should either be a regulated custodian or a regulated bank. They're holding assets. If they're lending, they should be regulated and will be the same way a bank should be regulated. If they're not lending, then they should be regulated as a custodian and should be some form of trust.
Now, do you think that the FTX situation will accelerate regulations or?
Absolutely.
Okay.
I think it's inevitable at this point. So much political fallout from this. It may undo some of the good work that has been done, particularly in the US, with trying to convince policymakers not to over-regulate. It's kind of hard to justify that at the moment, and unfortunately, you get tarred with the same brush. So there are some good people out there trying to do things in the correct way. It's been some lobbying from different organizations, including an open letter from Coinbase, try to convince the policymakers to move in the right direction. Trouble is, this will definitely not help those attempts to, instead of coming down with a sledgehammer. But the regulation is coming. There was an interesting talk earlier with 3 different ways forward. Sort of do nothing and hope everything's okay. Sort of ostrich, bury your head in the sand. I don't think we can get away with that. I think we need to embrace this, need to bring it head on, approach the regulators and say, well, how can we do this properly? At the moment, we don't have clear rules, and this is stifling innovation because certain clients that we've worked with, it's very difficult to build something while trying to second guess, is this compliant? Is it likely to be compliant 6 months from now, a year from now? And then you've deployed an immutable smart contract and you don't want to get retrospectively in trouble. That's we know many DLT solutions have in the past. So that makes it very difficult for both the regulators and those that are trying to build solutions on top of that. So unless you've got clear rules instead of sort of retrospectively the SEC coming in and pouncing on projects and saying, you've crossed the line here, people don't know where the line is. So we need ways to ensure that it's very clear where the line is and that there are rules there that you can test and verify that you're the right side of the line. Otherwise, we'd just be in this situation where regulation is not clear and innovation is delayed because people will try and then they'll get shut down, and we'll end up in this horrible cycle where kind of the legal teams are reluctant to sort of give you an okay to go and build in a certain direction because it's not clear what's going to happen further down the line. So unless there is some regulation, I think it would be harder for builders to truly commit and be sure that they're not going to be shut down in the future. So we need to run towards it. We need to embrace it. We need to do it in a way that fits with inside the crypto ethos of sort of legislation as code effectively. We're not at that. There are some moves towards that. There was an interesting podcast about it recently from one of the SEC commissioners about changing the language so it's easier for machines to interpret, so that it might be able to ensure that you're more compliant, but we're not way away from that at the moment. Unfortunately, regulation is coming. It's just a question of how do we embrace it and ensure that they don't go too far unless we get involved and actually try to help them to legislate in a way that's better for everybody.
Thank you. Now, Gaspar, you are based in Switzerland, right? Another very interesting example of embracing innovations within the regulatory framework. How do you see the activity now after the FTX situation?
I mean, regarding my personal or company activity, we didn't see that much movement in terms of regulation. I'm actually French in Switzerland. I've actually seen a few politicians already taking the FTX case to think back at DeFi protocols and that kind of thing. And obviously, that's the issue. That's one thing. Is even if you have regulation for centralized entity, at the end of the day, is that it was already regulated. Part of the activities, other things that we needed, wrong things relating to the law as well. So you don't want people transgressing the law and doing a centralized business, affecting people that are not transgressing the law and doing a decentralized business. That being said, as a builder, the best thing that we can have if you're building a decentralized protocol is probably a gray area at this point, because we're still in a period where you have a lot of changes. You don't want to too much. You don't want to have too much regulation and executive activity. I guess Switzerland and France are kind of the same there. You have communities of projects. They're pretty open to that kind of innovation. We have such big communities in France actually regarding DeFi. Pretty looking about that. In Switzerland, we have had communities, crypto communities for a long time as well. And I guess the regulator are open to that. For sure, FTX thing is not a good thing for us because an educated regulator will see that as crypto as a thing, and then DeFi is even more obscure, so it seems like an even worse thing for them. But yeah, the big change. I just hope that people will see clearly the difference, users as well, and they will be able to make an educated decision. I think in terms of DeFi, a huge topic is efficiency, and a lot of big DeFi players are using FTX a lot because they were talking about efficiency. And at the end of the day, that challenges that as well.
Okay, I remember that you're French. So let's talk a little bit about France. France actually banned this year use of crypto logo as sponsors at also sports events that had contracts with crypto companies. Emirates, on the contrary, one of the last Formula One at Abu Dhabi, you could see FTX everywhere. So how does it impact the communication of the sustainability of the industry to general users who haven't who either just joined the market or wanted to join? And we have this volatility also in terms of communication from the big. I highlight sports event because these are one of the most visible events all over the world. So how do we, as a community, how do we enable sustainable communication about those projects that fail and those projects that are doing sustainable development? Daniel, do you have an answer?
An answer, probably not, an opinion, maybe. But I do think that on that front, it's kind of a matter of time, and it will take still quite a while to get from like where we are here, where like many people who are just saying crypto collapse without really like understanding what exactly is collapsing, what the problem is, and like exactly what happened. But I do feel like it's still like, so at least a vastly broader audience and more like people, also bigger firms and bigger like players in the sort of DeFi ecosystem who actually have a very good idea of what's going on and who know how to respond to this, and who also have a bigger audience themselves, I think. And I feel like it's still at a stage where it's only a small set of people who kind of understand enough to know what's going on. But even as you said earlier, like yeah, apparently your audience doubled just this year, and I feel like it's a general trend. Like more people are getting a bit more interested to learn about what's actually happening and why this is like taking off or not taking off. And I think that hopefully in a few years, people should be able to sort of like understand where something was a clear scam, something was kind of just failed for some sort of obscure reason, or something was exploited. Well, and I think but it will still take a lot more education and probably a lot more bigger sort of companies and entities and so on trying to push this effort.
How do you bring this education to masses? Definitely work a lot thinking of educational frameworks for different types of beginners and medium users. So what's your recipe to?
I wish I had a recipe. Definitely not very good at making cakes or anything. So it is interesting. So I was teaching a course last week to a bunch of lawyers actually around blockchain and smart legal contracts as well. So smart contracts and smart legal contracts in particular, that's an area of research I'm involved in. And even they have difficulties getting it. And it's the classic problem of not understanding the difference between blockchain, Bitcoin, other cryptocurrencies, centralized exchanges, DeFi. And try explaining that to your parents. It's very, very challenging, and unfortunately.
Isn't it simple? Blockchain is good and Bitcoin is bad.
From an ESG perspective, I think we've all heard certain things about that. But yeah, that's the challenge. Is it all just seems like this blur between everybody, and they don't understand the nuances between it, and that will take time. And if you consider where they get their data from, it's from their friends or from the TV. And they hear about the massive returns, they follow YouTube channels, crypto Twitter, etc. So it's in some ways trying to balance that information that they are receiving with some facts and trying to educate them. It's quite challenging. So it's also something that is not really feeding in to the education system. In fact, in theory, in general, the education system is quite bad at teaching people about money. Never mind crypto or non-crypto assets, just basic money management. So it's hard to know where it will start at what level. In academia, we're only starting to see courses on this really come into like, school of management and other institutions as well. It's always been this thing that's been way off on the side that computer scientists or crypto folks are sort of interested in. So it's a long way away from mainstream. And fortunately, until that happens, people will still continue to get scammed. I think the UX will help. But people take the easy option sometimes and just, okay, I'm just going to go on the centralized thing. I have some Bitcoin. They look at their Revolut account and think, oh, I have some Bitcoin. They don't. I think actually some of those companies, even though it's centralized, they do a reasonable job of trying to explain to people, this is token X, this is token Y, this is utility, and they'll give you some tokens to start playing around with. That's at least one step in the right direction, but we can't rely completely on that either. We need something a little bit more independent.
I think I was at the Abbott Undergraduate and you were asking, like, how do we communicate better? Well, it's instructive that basically our communication with the industry, especially the marketing, revolves around speculation. It doesn't revolve around use cases. That's because the primary product market fit for crypto right now is to get rich. There isn't really another use case. It's sure you use DeFi so you can get richer. But that's kind of the message we're telling to people. I think until we're actually advertising use cases as if it was like Google, then our communications are not going to get substantially better, because I don't think the primary thing we should be marketing to people is a way to get rich quickly.
This is a very important point, and you mentioned making money. That is always a great banner for everyone who wants to become part of decentralized finance. So what is decentralized finance if it starts getting rich? I'm pretty sure that every one of you has some amazing definitions. Daniel.
Sure. Please. In my opinion, for decentralized finance, one of the main properties being non-custodial. So the user could have custody of their funds at pretty much any time. I think another quite important point is being transparent. So openly auditable, I think, is a very important point. So things like what happened to FTX, for example, should not be possible at all in this setting. And one last thing I think is also being composable, so being able to interact with other protocols, other parts of the ecosystem. I think, and so financial systems built with these three properties in mind would at least by the definition I think is DeFi, that would pretty much more or less.
Yeah, I mean, definitely agree with the definition. Maybe I can add open, permissionless, and automatic settlement as well. But otherwise, yeah, and it's efficient. Very good.
Now, what is decentralized finance for you and your students?
Programmable money, I think, is an easy way to describe it without getting into all. It's definitely all of that, in particular efficiency. This is faster, cheaper, no middleman. That's ultimately where it gets its benefits from. So, but I think it is the composability. I'm a software developer, I like the concept of libraries. Let's import that protocol and then build on top of it. It's a good presentation earlier showing different layers. DeFi was just a layer on top of smart contracts, protocols, etc. So I think it is that it's a set of reusable code that can deal with financial assets in a very efficient and effective way and can allow services to build on top of that.
What's the biggest value of DeFi for you?
For me specifically, the essentially being able to move the risk of doing certain things, such as bridging, or relay of messages between blockchains, off the user onto someone more able to bear it. That's how we're using it. And I think that sort of tracks how finance developed, especially derivatives, where you're moving the risk of weather, you're moving the risk of the harvest off the farmer onto people more able to bear it. If you look at the bridging environment at the moment, there's been, I think it's close to $3 billion worth of losses in the last year. That needs to be essentially, removed. And I think DeFi is one of the best ways to do it. That's what we're working on.
I would add the word freedom. DeFi is freedom. DeFi, because centralized classical finance, it's not only about managing money. It's also about waiting for a week for a bank transfer from Singapore to UK, or having to gather 100 documents to justify that you have a collateral for I don't know, $10,000 rent. So DeFi is something that revolutionizes not only the way we treat money, but also the way we treat ourselves with the financial system. And still, I already mentioned today that we have an example of Web 2, where it also was in the beginning a way of creating new freedom for community. And then there were those who wanted to use this freedom, benefit of that freedom in order to fraud people, create scams, or create small communities that worked for the benefit of this bad actors. So how do we make sure that this amazing values that all of you just mentioned and the freedom that the industry is supposed to bring, that we do not multiply bad actors, but rather promote this good usage and good standards and good culture? Gaspar, you have the mic.
So the question is, how do we promote good culture?
How do we make sure that the industry doesn't become populated by bad actors?
I think we're pretty lucky on one thing is like we keep evolving and fail iteration as well. We need a FTX blowout to understand that, yeah, centralized exchange are not a good thing. We need a under collateralized stablecoin to blow up to understand that, yeah, maybe 20% yield is not sustainable and we should be more careful about the system that we're using and then the composability and composed asset as well. So DeFi have been built that way since the very beginning, hacks, scams and everything. And it is what is making it very resilient today. So that's I guess on the awareness part as well. Education is of course very important. Regulation is very important for the builders and for the users. I think all those subjects are actually evolving pretty well, even though we still see things, big things blowing up. Eventually, market phases tend to make things a little bit slower, so that's good because market became extremely big very fast. You have protocols that engaging hundreds of millions in a matter of days, not detail at all. So of course that is dangerous, and I guess maturity in general in all those topics is something that we've seen growing and evolving in a really good way. So I'm actually pretty bullish on that side. I think we need to continue to engage all types of actors in all these thematics, and things really work well. Things are already working well.
Thank you. Daniel.
No, I think I agree mostly with all of this. I also think that the UX aspect will be quite important because obviously when they're well established protocol and so on, if they're well integrated UX wise, and people can sort of know that this is okay, this is a fairly well respected, trusted by so it's defined trusted, so well audited, let's say, protocol, they'll know that this is safer than something that just shows up. And so I do feel like there's some improvement we made, like so that the UX also helps the user to like go in the right direction in that way. Also, it's going to be something difficult because I also have no idea how to improve the UX of DeFi in general, but it is definitely something that needs to be considered.
Start with getting rid of blind spot. Gotta figure out how to handle it. It's a nightmare.
Yeah, but we still highlight that DeFi is accessible to everyone. That is very bad publicity for DeFi, in my opinion. We should actually know it's very close. Nobody understands anything, but you should learn, and then maybe you manage to. Okay, Niall, what about yourself? Who you think will be winners and losers, and how we make sure that the winner is not the most rich and those who have the best UX at the same time, but maybe bad intentions.
Well, maybe I'll roll my answer to the last question into this, because I think it's the same really, and it's about incentives. If you can build a community whose sole interest is to ensure that whatever protocol they're using is in everybody's interest and it's fair and equitable, then it needs to be self-policing by the community. So some of the clients that we're working with were involved in DAO projects. We're looking at incentives to ensure that everything is equitable and sustainable. So this was mentioned a little bit by Sylvia on the panel earlier about ensuring that voting rights are done in a particularly fair way, and it's not just whoever is holding the most tokens. So similar to that in DeFi is, can the community police itself? Can it keep the bad actors out, or at least under control? Another example of that, I think, was one of the talks earlier about NEV. I thought NEV was such a bad thing, and now I'm learning actually, we can keep things in check. And the private transactions did remind me a little bit of trying to bribe the school bully not to take your school lunch away from you. So, but nevertheless, it did seem that allowed lower transaction fees, and it's interesting. But can we ensure that the incentives are sustainable? So, is there enough value there for the rest of the community to keep the protocol going, to keep it fair and equitable for everybody? And those will be the protocols that stick around. People will keep using software that works, is giving them a reasonable level of return. Maybe the 200% was always going to be a little bit ambitious and not sustainable. There's a lot of protocols out there. There's a lot of projects that have come and gone and Ponzi schemes. So those that are sustainable will, just like in the financial crisis 2008 and the dot-com bust, which I'm old enough to remember trying to get a job around that time as well in the software industry, the companies that survived that came in stronger. So those that are the cockroaches rather than the hares are generally the ones that will stick around, and that is community driven. It needs to be an active set of users. The governance needs to be right. You have to have an active developer community and a critical mass of users to keep the system honest. And those I believe will be the ones that stick around and will continue to win.
What about your take on incentives for community, but also incentives for regulators, incentives for which incentives for which actors, in order to make sure that we keep it sustainable and keep off bad actors?
Shouldn't regulators just be incentivized to do their job from having a job? Like, I mean, I'm really, I get quite furious with this because so much of the reason why blockchain is essentially highly speculative is because regulators haven't done their job. And so we haven't had, we haven't had the critical mass of ideas come to the space because it's been a very limited set of people that have come to the space. Those who feel confident enough that they're not going to get, a subpoena, and those that don't care. That's not an ideal, that it adds a level of risk to development for essentially software engineers that A, on the whole, they generally don't understand, and B, given they can get paid 6 figures at Google, why would they take it? So the fact that regulators haven't done a job has meant that our industry has largely been defined by excessive speculation through a lack of utility. And
The quickest people are in blockchain. Regulators are not that quick,
well,
but they should
they
do
need to
their
get-
job
they
and
need-
let let's
really need
let
to
the
do
industry
their
do
job.
theirs.
They really need to do their job. Like, it's really not that hard to regulate CFA. Like, trying to mess around with Tornado Cash or whatever it's called, that's one thing. So seemingly they're able to do that. Trying to, do whatever they're doing with Ripple, fine. That's an example of an enforcement action. But why haven't they touched the exchanges? Why didn't they catch Celsius? Why didn't they catch Wildfire? These are clearly like hedge funds. Right? And it's not easy, it's not difficult, and it's within their remit. So that's kind of like their incentive should be just to do their job because they have a job.
I would love to give the floor to questions. We have a bit of time, and I'm pretty sure that there are some interesting thoughts from the audience. Do you have a mic? Or come here and take one mic from here.
I can stand up. Everyone can hear me. Can everyone hear me?
I think there is a stream, so it's better to use the mic. So the posterity will know who asked the question.
This is a question for you guys actually. So I think the is that working? Yeah, I think the UI side, you're completely right. At Nethermind, we've been working on account abstraction to abstract a lot of the complexity with regards to wallets. There's a lot of work to be done on that side so that we can onboard more regular users. I guess this question is for Hugo and Mark. Good to see you again. I think when it comes to regulation, are we going to see a double down on regulation after the event what's happened this year with FTX and all the other centralized companies before that? Because Hugo does have a very good point where all these companies were they're supposed to operate in a regulated environment, but none of them actually took that into account, right? So they were moving users' assets when they're not supposed to. So I would love to see a double down regulation, but also I guess it's kind of moving quite slow because a lot of these policymakers are working in isolation. Are we going to see them working together much closer so that we can speed up regulation process?
Doubt it. I mean, they've mostly been regulating on the securities front through enforcement. They don't seem to be interested in regulating, all the other aspects of how consumers use crypto. I doubt they'll double down. Dubai seems to be doing a good job there. And I suspect, no, I reckon they will double down, but whether they cooperate, I doubt it. And the doubling down will probably cause further sort of permafrost in crypto.
I'd agree with a lot of that actually. The only thing is that I think, well, first of all, one of the points that you mentioned is that regulators doing a bad job. Let's not forget 2008 in the CFI world, they've not been doing a very good job on the sleep at the wheel through all of that as well. So regulators, even on the concepts that they claim to understand quite well, don't necessarily do a particularly good job. I think one of the solutions for that to avoid repeating those mistakes and to embrace the technology that we have at the moment is if there was a way for the regulators and the builders to work together to have executable rules, so enforced rules. There are some precedents for this. So there is a solution out there called Digital Assets Market by which DAMO. It's it's an open source project, but produced by something called Digital Assets. And there's some trials at the moment that have been going on around the world to try to codify rules around things like credit default swaps and other financial instruments. And that's a way that you can have the code, it will function, it will run on top of a DLT. In fact, it can run on multiple different DLTs, public and permission blockchains as well. And that allows you to code the rules. The regulators come on board and they say, yes, this complies with our regulation. And builders have a standard set of utilities that they can work from, standard set of libraries, and everybody can agree this is tested, this is clear, this is auditable, and maybe that is a way forward. So the project I'm working on at the moment is called the Accord project. It's a smart legal contract framework, and it can also work with these types of financial assets as well. So I kind of see it as almost more like in the sort of TCP, IP, HTTP level, we could have the protocols and smart contracts and sort of RegTech layer on top of that that will be independent of the underlying DLT. And both the builders and the regulators can agree these are the standard set of rules, and the contracts can interact with that either on chain. It has to be obviously sustainable and scalable, so that can be quite heavy. In fact, there was a project recently that was canned because it wasn't fast enough, but I think that is something that can improve over time. Or it might be some kind of on-chain, off-chain call by an Oracle, which again can slow things down, and you have to rely on oracles, which has come up quite a few times today as well. But I think that is one potential step forward, which will allow both parties to work together. Again, there is some precedent for it. It won't cover everything, but maybe that would allow certain types of financial instruments to standard specs way. Maybe that is way out of this.
Nothing better than punishing those
Absolutely.
who created some, or you mentioned Google Automatic Cash. Last week, there was a trial in Amsterdam against software engineer who created the open source code. So, and this brings us to the discussion that Carsten here inspired, who actually has to be, who has to keep liability for what's going on the chain. I'm not sure it should be software engineer because he didn't have standards that he could follow. So obviously standards-based way regulations. Speed. Other questions, please.
I'm curious what the panel thinks about the recent events will impact CBDC, and what do you think about the long-term interaction of private crypto and CBDCs?
I think it'd be fantastic for CBDCs. But a more potentially repressive financial instrument, I couldn't imagine. Giving government the ability to essentially do whatever they want with your money without, necessarily, they haven't been fantastic due process in every jurisdiction. That doesn't fill me with joy.
I think the last stat is that 90% of central banks around the world are installing some form of CBDC project, so it may be inevitable. I think China was one of the first out of the blocks there as well. It's interesting to see what's going on there, and actually the whole sort of blockchain, the DSM networks, which are sort of blockchain with Chinese characteristics. I guess that's one way of putting it. But I think it's inevitable. I know here the HMRC, their head of innovation, is a big fan of CBDCs, and there's been a few trials going on around the world as well, and obviously some live projects. So I think it's a question of not if, but when. Yeah, obviously trade-offs for that. Great in one sense. What will that mean for other stablecoins? Will they say, no, you must use our stablecoin and that's it, all other stablecoins are now sort of defunct? So it certainly remains to be seen, but the jury's out, I think.
I mean, I think one of the things I think for like CBDCs, if they do come into existence, is that if we do manage to like bridge these with current blockchain systems, it could make it a much better experience for the user compared to what we have right now. Right now, one of the biggest hurdles is we kind of always have to go through a centralized entity that is more or less resource depending. And this could potentially be a vast improvement over the current situation.
And I would like to add from the communication point of view, so many people still do not understand that CBDC, well, has very little to do with blockchain. And this is maybe the opposite of decentralized finance. But people think that anything innovative can like be more or less the same circle of new concepts that can be used. And I think this is important, very important from communication point of view to actually communicate with CBDC and DeFi like two opposite fronts. Please.
I would like to ask Daniel to elaborate a bit further on this strong statement he did, because in the end, CBDC can offer something to the general public, like being custodian, for instance, of your own money. And maybe you can say a couple of words about what the government can do that the government is not already enabled. Of course, there is a bigger issue in terms of privacy, but there are also a lot of interesting proposals that could be privacy preserving, and the technologies developing very quickly, both cryptography and other things that are being adopted at the moment.
So I guess I'm coming from a position where I'm a believer in decentralization, clearly. So for the first time ever, a government will be able to impose a negative interest rate on its population. Right? That is really quite a nasty position to be in. That isn't something that I think is a desirable position to be in, because if you just hold cash, you can't be taxed on it, through interest rates. If you hold a CBDC, they can just take it straight out of the code. So that is essentially a power that we would be giving to the government, which we've never given before. And sure, you can have rules on that and all that kind of stuff, but our experience over a long time is that rules can be broken in extremis, and then they become a de facto position forever. For instance, income tax was, I think, a tax for 1 year to fund a war. I think we still got it. So that's the first thing. And then the second thing is less applicable here, though not inconceivable, things like social credit systems. That handing over, removing cash from society is a really sizable change in our deal with government, in our social settlement. I believe that it shouldn't just come through like imposition. We would have to have a new social contract with the government if we were going to accept that as a criteria.
Sorry, just a bit. Does this hold if you imagine a future where CBDC coexists with fiat money, with currency?
I think if you've got, do you mean cash, physical cash? Yeah, fine, but absolutely fine. Then I just move my money out of CBDC and I hold physical currency. Great. Our experience has generally been that it's pretty hard to use physical currency these days. You try to do something over £1,000, I think you start getting asked questions. Try to do something over £10,000 and people start telling you no. So the reason why I say it's financially impressive is because whilst, in the same way that censorship on the internet with regards to social platforms reduces the number of views that are available in the public discourse, whether you like them or not, you would end up with the same for a financial system whereby ultimately, sure you can use cash, but it's not, you kind of looked at suspiciously. And I don't really want to end up there. I think people should enjoy the fruits of their labor.
Any other questions? So we do not end on a passion note.
I just wanted to just say one thing that you mentioned earlier about self-custody when it comes to central bank digital currencies. This completely might be completely the opposite because it's from central banks. What I would like to hear from the panel is kind of answered. It's been answered a little bit already. I mean, I'm a strong believer on DeFi, but there seem to be a lot of central bank digital currency projects around the world, not mentioned at least 95%. So it's going to happen, whether you like it or not, I guess. But so on that note, do you guys see an environment where both central bank digital currencies and stablecoins can coexist together? And I guess we have Daniel here, who's building an algorithmic stablecoin. So maybe you can answer that.
I mean, at least personally, I do think that there would be a lot of value for this coexisting. And I don't think there is such a massive difference between physical cash and stablecoin coexisting. I think it doesn't really, the form of which the sort of currency emitted by the government, whether it's digital or not, I still think that as long as the regulators allow it, it makes a lot of sense to have something that's a bit disconnected from the government and that can be actually that people can have self-custody on, which is the case right now for non-custodial stablecoins on Ethereum. So I think as long as it's not possible to have self-custody on your currency, which for CBDC you can definitely not really have custody like the government at the end of the day will. I think it will bring a lot of value to still have the stable coins as we know them right now around.
And to general that, I think that point was made already for finance in general. Like a lot of people saying DeFi versus CeFi in that manner, and eventually at the end of the day, both of them coexist. Both of them, it's about building arbitrage paths between those two actually, because you have things working in a particular way, in a very centralized way, and things working in a decentralized way with different and also kind of places. So you build arbitrage paths between the two, and of course they both coexist, and the consumer and the builder and efficiency will decide eventually what are you actually using. But I agree, if you have a stablecoin emitted by a central bank, they will have to custody as well, because it's on the blockchain that it makes you. That is very different from the Ether, and then USDC is very different from DAI as well. Exchanges, those are big differences, even in appearance they can seem the same, and I think it makes a lot of sense to, if we can bridge them, we can arbitrage the two systems and then eventually build our own that works in a better way as DeFi started to do initially.
I like the idea that there will be choice. It depends on how programmable that CBDC is. You have wrapped versions of it on the different protocols. I certainly think the privacy angle is definitely one worth considering. So if you don't want the government saying what you're doing for whatever reason, just legitimate reasons, then there will be a role for stable coins that are not CBDCs. I think so there's choice. Those who want custody should have custody. My fear is that once the government comes out and has, oh no, we have a digital pen, a digital euro, whatever it is, and then they may legislate against the stable coins. That's my biggest concern. If that doesn't happen, I think you have a choice. Something that's more programmable.
Hello.
If I may, thank you very much. I enjoy very much from the background. the discussion we touched at different points, which also was discussed in part this morning, talking about the different strategies that they want to take. We touched upon the greediness of crypto holders. They just are there about because they want to get more money out of thin air. We discussed about the bad job or no job the regulators did so far. And we discussed about the improvements that the industry is taking. But I think something maybe can happen from the industry, from inside the industry. And after the FTX, there was a kind of a movement or a decision taken by one of the top leaders in our industry, which is CZ from Binance. So he was suggesting something like something that happened in the banking system many years ago, which is a kind of a self-insurance mechanism for deposits. So he proposed to set up a rescue funds, putting $2 billion out of his pocket, and he was calling the industry to jump on board. So I think this type of what do you think about this? So of course we are waiting for the regulators to do the nice regulation we want, or the regulation that help the industry to evolve, but also the industry could potentially say, okay, I'm greedy, but maybe I want to be less greedy. And if we are all self-insured each other, then maybe we can create more longevity, and longevity allow business to stay in the market longer than otherwise they would be. So what would be what is your take-home message from this movement that is needed?
I mean, I think it's an excellent idea. The industry will have to look after itself. If others won't do it, then they shouldn't. So yeah, it's a great idea. But I guess there is only one question I have, which I haven't been able to grapple with mentally, which is if we don't have the ability to issue money, I'm not sure how that works long term, because ultimately, if you look at every time a central bank has had to bail something out, ultimately, or recently at least, they've had to essentially issue money through some capacity or another. So I think the rescue fund is a very good idea, but I sort of question whether it's mechanically capable.
I guess there's a couple of points to that. The skeptic in me might say somebody like Binance, who has deep pockets, might be willing to go out there because it's a way of forcing other exchanges who maybe are not as well off as Binance to maybe price them out of the industry. So that's the skeptical answer. But I think just to my point earlier about the industry fixing its own problems, as you mentioned, the community coming together and that the crypto industry solve its own problems, I think that is definitely a very positive step forward and will keep it sustainable if everybody is aligned in their interests. One of the points mentioned like 2 talks ago was around insurance, and in particular smart contract insurance. And I think that is another alternative. There are a few providers out there, ETH Risk and Nexus Mutual and a few others like that. So they will pay out on breaches. They will pay out where there was a flaw in the smart contract. And that again is something that can be an asset that is an investment for the community as well. So there are actually some mechanisms in place there to do that. The more controversial approach is about reversible smart contracts. So this is a proposal from researchers in Stanford, where I believe it's, I forget the EIP number on it, but the idea is it's a 48-hour window where if there's any major breaches, it could be reverted. So I know that's controversial in crypto, but maybe that is potentially a way forward as well. So there are mechanisms out there to distribute the risk. Failures are inevitable. Yeah, I think it's definitely worth exploring what can be done within inside the industry before having to get overly regulated with this legend.
I would still add that there is a very high level of competitiveness in the industry. And I remember there have been appearing some associations of exchanges, standards for exchanges, and that even exchanges, because you are talking about seizing Binance. Remember there was one launched by OPX and Binance were not part of that association, but created their own. So there is still lack of this dialogue among all the actors. And I think this is, as you mentioned, this can be key to actually finally make a common front and work on the sustainability.
Yeah, I mean, it's definitely a good thing to see. But in general, when something blows up and you have a good project, maybe that can be affected by that. And it's always good that you have risk funds or people that are actually trying to have them standing up again. That being said, I mean, skeptical about the insurance mechanism that exists currently, the adoption. Definitely skeptical about reversible transaction, at least at the lower level. If you want, you have to trust that managed. Yeah, I don't know, like I mean, that was very out in practice the way he was coming from nowhere as well. So, yeah, those actors are not the people talk about, and eventually markets reveal the position today. So good thing that we think the community depends on that trace the case of finance.
Just to come back quickly on the insurance side, I also think that one of the main problems right now, like for to have proper sort of insurance for smart contract, that I just mentioned, is that we have a very difficult time assessing risk. I think it's still fairly poorly done compared to like let's say other types of insurance. For example, like in whatever insurance, but let's say life insurance, people doing that have an extremely good models to kind of frame the risk and price this actual insurance. Well, I think for smart contracts, it's still very difficult to sort of assess the actual risk and impact, and so to end up pricing this. And I think this is still going to take quite a while before we kind of get the good enough model to be able to sort of slightly more sustainable type of insurances.
So we are moving forward, and there is no limit to perfection. I would love to thank amazing group panelists and all of you for your inputs and ideas and energy. Thank you very much for this.